Hey, Bulls and Bears, we are back. We've got a lot of good news to get into today. The economy continues to crumble, and the underlying theme of this channel is that things are not always what they seem. Good news that's being reported in the economy is a lot of times it's really bad news in disguise. Um, I'll just go back to the basics here. The story or the line that America is the world's richest nation. Well, we're the world's largest debtor nation. We borrow the most money, and that gives us a very high standard of living because we can afford to create all this money and hand it out, and it makes people feel like we're rich. And a lot of people that really don't have anything in savings have a nice car, they have a nice house, but basically we're a debtor nation, not just as a country, but even as consumers, with debt right now here in 2023 at all-time highs, worse than the financial crisis levels. And we talked about just a couple reports ago about how half of the population has to work a side hustle in the gig economy just to get by. So in addition to their full-time job, they're taking one or two um, gig economy jobs, or what's called side hustles. All right. But we've got a lot to cover today. Wow. So 2023 is getting off to a very rough start, obviously, with the bank crisis happening. No surprise to anyone that's been watching this channel. We know that the banks, they don't have enough money to stay solvent. If enough people go in at one time to try to take their money out, that creates a bank run. Or if too many people default on their loans at once, kind of like what we saw back in 2008 with the financial crisis then. The same could happen now if too many people default on their loans. Well, the more job losses stack up here, you're going to start seeing more people default on their loans. Bankruptcies are going to increase this year. And actually, last year, remember, I warned that 2023 was going to be the year of the bankruptcy tsunami, of the vehicle repossession tsunami. And things are coming true early in the year. Here we are. March is just ending. Today's March 31st. The last day of the first quarter of the year, by the way. So, goodbye first quarter. But here is the news on the bankruptcies. This is the retail bankruptcies. Now we're going to see this trend continue over to consumers bankruptcies. But here's what's happening with retail bankruptcies. This is out of sourcingjournal.com. Report finds troubling trend in retail bankruptcies. Just 3 months into the calendar year 2023, we've already seen more retail bankruptcies than all of last year. Just 3 months into 2023, more bankruptcies than all of 2022. What's it going to be like in the middle of the year after 6 months, or what's it going to be like at the end of the year if we're already worse now than we were in 2022? How many more stores are going to close? Wow. So that just shows you that the strong consumer that the media has been reporting is maybe not so true. Otherwise, why would you see so many retail bankruptcies? Now, rising interest rates plays a part of it because companies also issue bonds to basically finance their debt, and that becomes more difficult with a rising rate environment. So there's a lot more to the story than just less people spending money at these retailers. But this is not really surprising to me at all. Check out that article if you want, sourcingjournal.com. Now, there's a very well-known, popular financial guru out there saying that there's going to be a huge bank failure. And it's not just any bank, it's a central bank. And we're going to talk about that here in just a minute. But first, GDP, that's gross domestic product, was revised downward for last quarter. That seems to be the trend, doesn't it? They put the number out there and they say, oh, it's better than expected. The stock market jumps up, and then a few months later, oh, we have to downward revise that. We've got new data in. Pretty amazing, but not really surprising. Now, let's talk about Goldman Sachs. Goldman Sachs is predicting that AI, artificial intelligence, could replace 300 million jobs in the coming years. 300 million. That is almost the entire population of the United States. And that's actually more than the working population. If you just look at the age that people actually work, 18 to 65 approximately, it's a lot more. But yeah, 300 million jobs replaced by AI. That's a lot of layoffs. It's a lot of layoffs. Now, I mean, we already see self-checkout. We already see digital menus taking orders, and when you call a place, you try to get through to a live person. You have to talk to the robot sometimes for 10 minutes, or the the automated voice recognition system, which it doesn't really recognize your voice too well because you have to repeat the same thing over and over. Live person, make a payment, make a payment. Okay, because the 300 million they get laid off, if they go get a job in fast food, let's say McDonald's or Burger King, that'll be counted as jobs added. So that'll look good for the economic numbers that they can report, in the news. So, I'm joking, but I'm not joking. That's really kind of how they do it. Here is the big story here, in my opinion. Financial world sounds alarm over biggest bank that's going down. And this is someone you probably all heard of. He's got a channel right here on YouTube. Robert Kiyosaki. Quote, the biggest bank that's going down is Bank of Japan. Because of the Bank of Japan carried interest rates at near zero or whatever they did and financed the derivatives market. We talked about derivatives just a couple reports ago about how some of the mega banks here in the U.S. have derivative exposure greater than the entire debt of the United States, greater than 30 trillion, some of them. Kiyosaki continues, in the derivatives market, as Warren Buffett said about derivatives, they're weapons of mass financial destruction. And the derivatives market in the world today, financed by Bank of Japan, is $1 quadrillion. There's a number we don't speak of very often, $1 quadrillion. The Rich Dad Poor Dad the Rich Dad Poor Dad author's comments, if I can speak here, come amid what some have optimistically labeled a market rally after stocks recorded another strong day in the stock market. Yes, stocks did go up here the last few days, but it continues. The Bank of Japan has been financing derivatives $1 quadrillion. Just to put that into perspective, if you can even wrap your head around this, I have a hard time. $1 quadrillion is $1,000 trillion. $1,000 trillion. He explained that on a show called Cavuto, Coast to Coast. In addition to the derivatives market exposure with that bank, he also criticized the money printing habits out of the U.S. central bank and aggressive rate hike strategy. It's pretty interesting. People compare the current rate hikes to, they compare them to the rate hikes we had back in the 1980s, where the Fed funds rate was about 5%, and they took it briefly almost all the way up to 20%. So about a tripling of that. But if you think about it now, it's even worse because we went from near zero to almost to about a 5% funds rate, which is a bigger increase. I mean, not just from 0 to 5. You think it's just 0 to 5, but think about that. That's a 5-fold increase. If it was 1% and went to 5%, that would be a 5-fold increase. Back in the 80s, it was 5% with the 20%. That was only a quadrupling, right? So it's bigger now, and actually it was near zero. So the near 0 to 5 is about a lot bigger as far as a percentage increase. So consumers are having a hard time, keeping up with the cost of living, and the rising rates. Yes, it hurts the bank, but it's also hurting consumers. All right, but we told you here that the rising rates wasn't really going to do that much for inflation. Yes, home prices came down a little bit. Car prices came down a little bit from the peak. But if you look at last month's data that we have information for February, they went up from January to February. Used car prices went up. So these rate hikes aren't really the magic silver bullet, that people had expected for inflation. If they really wanted to fight inflation, what they should do is they should stop banks from loaning out money they don't have, require a 2-to-1 ratio, meaning for every $2 the bank has, they can only loan out $1. Now, they don't have to have anything. They can loan out unlimited amounts of money. It's a zero reserve lending system, which is insane. And that's why you see the risk of bank runs. And that's why when too many people pull their money out of the bank at once, the bank becomes insolvent. Or if too many people stop paying their loans, the bank becomes insolvent. If people now were to get together and everybody stopped paying their loans, you would see a widespread collapse of many banks because, again, the banks are loaning out money they don't have. So it's the very definition of a Ponzi scheme. You always have to have new money coming in to keep it going. That's why you see so much money printing. It's insane. It's mind-boggling. How much longer this is going to last? Your guess is as good as mine, but I know that this entire house of cards is going to be coming down at some point. Yes, they're going to try to find new ways to prolong this to keep it propped up. They're even going to go to a digital currency here in the next few months. We talked about that just a couple reports ago. I believe in July that starts. If you don't know what that is, check out my video from a couple days ago where we talk about the nightmare starts in July. Many people are saying that that's the start of the something very, very dark, a very dark monetary system where everyone's going to be tracked, controlled, traced, restricted, limited. A lot of bad stuff there. But let's get on to some other news here. Layoffs are stacking up. Layoffs are stacking up here. Here's a few big ones. We've got Roku, the streaming device. Roku 200 layoffs. Hulu, 200 layoffs. EA, that's Electronic Arts. I believe they make video games. Almost 800 layoffs. Lucid Motors out of San Francisco, luxury vehicles, 1,300 layoffs. I thought the consumer was strong. I thought the economy was recovering. Why are we continuing to see so many layoffs, right? And why are we seeing bankruptcies this year already after 3 months exceeding 2022? I thought we were in an economic recovery. That's what the business news channel on cable news told me. So very interesting times, folks. Here's another story. I want to put this out there because I think a lot of people get complacent because maybe you're doing very well. Maybe you have millions of dollars in the bank. One, that can be gone overnight. And if you don't get rescued by the money printer, you may not get that money back if you have more than 250,000. Actually, even under 250,000, I would be very concerned considering how little money the FDIC actually has to cover all these deposits. Remember, there's about 18 trillion in deposits, and FDIC is reportedly having between 100 and 150 billion to try to cover 18 trillion. So that's why they had to get a injection, straight out of the central bank in order to do the last rescue that we saw here for these recent bank failures and rescuing the depositors. But here's a story here and an example of how quickly things can really go sour. Family of 6 left without a car and home after a vehicle rolls into living room. So they were getting their vehicle repossessed. They volunteered, or they did volunteer. They cooperated, and they got their stuff out of the vehicle. The tow truck hooked onto it. The tow truck didn't hook onto it correctly, and it came rolling off and into the front of the house, smashing into the living room. So now they can't be in their house because they have to get it fixed, and it's too cold to stay in there. So they lost their car, they lost their house all in one day. And this is a family of 6. So if you think you have it bad or rough, imagine what would you do if you have a family of 6 and all of a sudden you have to go find someplace else to live, and hopefully you have a car because they got a car repossessed. I hope they have an extra car. Just a crazy story. This is out of 11alive.com. And even if you have a lot of money, things can change in a hurry. I mean, look at medical bills. If you're in the hospital for, let's say, a few weeks, have to get some sort of surgery, who knows, reconstructive surgery, broken bones, maybe you're on life support, it can add up to hundreds of thousands, even millions of dollars. And if you're stuck without insurance, you can get wiped out very, very quick here in this country here with this cost of living. Earlier, we talked about how AI was going to take a lot of jobs. AI could replace 300 million jobs is what they're saying. And it's already starting. Here's a story here. Levi's using AI-generated models to put in their commercials. So now we don't even need real models anymore. I was going to start working out and try to become a model. Just kidding. A little too old for that. But now my dreams are crushed because it's just going to be an AI-generated image to pose in these Levi clothes, jeans, and whatever. I wanted to be in a Levi's commercial, but I guess my dream is going to be gone because AI is going to take my dream job. Just kidding, folks. All right, my joke's not that funny, but thanks for being here. Hope you guys like this update. I know it's not easy to like news that's not so good, but let's face economic reality and let's get ready for what's coming. Some people say hyperinflation is coming because the money printer is going to go mega bonkers, right? And that's why you got to have precious metals. I encourage people to stack silver. I think that's the number one most undervalued asset right now. Silver, the price is being suppressed. Central banks are accumulating metals at an all-time high every year. It gets more. And that should tell you something there, that if central banks are doing it, there has to be a reason. All right. So, all right, people, thanks for watching. Peace and keep stacking. We'll talk to you very soon. Bye for now.